Welcome to This Explainer. I am so thrilled you're here with us today because, well, we're going to peel back the layers of a truly fascinating company in the global tech ecosystem, and that is Nordic Semiconductor. We're looking at their newly released, really comprehensive Q4 2025 results, and more importantly, we're mapping out their strategic path toward 2026 and beyond. So whether you're actively tracking semiconductor trends, or you just kind of want to understand how a multi-billion-dollar tech firm manages its balance sheet for high-growth scalability, you are definitely in the right place. Okay, let's dive straight into this. Here is our roadmap for today. First, Nordic at a glance. Then, the 2025 financial snapshot. Third, credit rating and forecasts. Fourth, ESG and corporate governance. And finally, looking ahead to 2026. So Section 1, Nordic at a glance, the tech behind the ticker. Let's ground this in reality. You know, behind Nordic Semiconductor's massive $2.6 billion market cap is very tangible, physical hardware. What you are looking at right here is the kind of ultra-low power technology that literally connects our modern world. They specialize in these hidden chips and physical components that make the entire Internet of Things possible. It is so easy to get lost in the spreadsheets, but this right here, this physical piece of engineering, well, that's the core value driver of everything we're about to discuss. To give you the bottom line up front on their scale, Nordic has been around since 1983. They are what's known as a fabless semiconductor company. That just means they design the hardware but outsource the actual fabrication, which is a highly efficient capital model. They trade on the Oslo Stock Exchange under the ticker NOD. But hey, look at that second bullet point. Out of their 1,431 employees, roughly 75% are dedicated entirely to research and development. That is just a massive commitment to innovation, and it tells you exactly what kind of company they are. Very engineering-led and very future-focused. Moving on to Section 2, the 2025 financial snapshot, going inside the balance sheet. Let's look at the cash flow. First up is total equity. Nordic saw a really significant jump here. They ended 2024 at $569.8 million and closed out Q4 2025 at $679.6 million. Now, this jump wasn't just magic, right? It mostly reflects a highly successful share issue where the company raised $105 million in gross proceeds, which immediately bolstered their baseline. And that bolstered baseline brings us to this incredibly important number, 69.1%. This is Nordic's equity ratio against a huge total asset base of $983.4 million. If you're an investor, you love seeing this because this number translates directly into the word stability. Having nearly 70% of a billion-dollar asset base funded by equity rather than debt, that means they have incredible financial resilience to weather the natural cyclicality of the industry. This brilliantly illustrates the company's operational discipline over the last year. Cash and equivalents grew nicely to $307.4 million. But look at those next two lines. They're key. Net working capital, which is essentially the cash tied up in day-to-day operations, plummeted to 21.8% of revenue. That's down from 34.1% at the end of 2024. Meanwhile, inventory decreased to $155 million. This paints a super clear narrative for us. Nordic got significantly better at turning inventory back into usable cash much more efficiently than they did the previous year. Let's step into Section 3, credit rating and forecasts, or what we like to call third-party validation. So Nordic Credit Rating, which is an independent agency, has assigned Nordic Semiconductor a corporate credit rating of BBB stable. For institutional investors, this is a really crucial signal. It's an investment-grade rating, meaning the agency fully expects Nordic to comfortably cover its liquidity needs over the coming 12 months with limited need for external funding, even if things get a bit stressed. Now, what's really interesting about this slide is the specific rationale behind that rating. The analysts explicitly state that Nordic's strong balance sheet actively lowers their risk. Why does this matter? Well, in the semiconductor industry, you absolutely need cash to invest in R&D and supply chain expansion. The agency is essentially saying that even if free operating cash flow is a bit limited over the next 2 years due to these heavy investments, Nordic's balance sheet provides a massive, very comfortable cushion. I want to guide you through this timeline, which represents the agency's base case forecast. Notice the tension here. In 2024, Nordic posted a negative EBITDA, which is essentially their core operating profit of $25 million. Ouch, right? But look at the incredible release of projected growth that follows. Revenues are projected to surge from $511 million in 2024 to an estimated $900 million by 2027. And that negative earnings figure It's forecast to flip to a positive 54 million in 2025 and scale rapidly up to 138 million by 2027. This is the exact growth narrative that their strong balance sheet is currently financing. All right, Section 4, ESG and Corporate Governance, Balancing Growth and Responsibility. So here you're seeing a very real tension that a lot of hardware companies are facing today. On the one hand, Nordic has these incredibly ambitious long-term climate goals. They're aiming for a 90% reduction in emissions and to be net zero by 2050. But on the other side, you see the short-term reality, a 23% increase in Scope 1 through 3 emissions. That means everything from their direct footprint to their broader supply chain. Now, this isn't because they just abandoned their goals, not at all. It's actually a direct result of purchasing larger quantities of goods and services. It perfectly highlights this clash between ambitious green targets and the carbon-heavy reality of expanding a physical supply chain. Pivoting over to governance, let's run through some rapid-fire data on diversity. Currently, women account for 17% of Nordic's executive management team. That's a baseline metric that many analysts track to gauge internal corporate equity. Let's move on and see how this builds, though, because if you jump up to the shareholder-elected board members, women make up a much stronger 60%. This stark contrast shows us that while the executive pipeline might still be a bit of a work in progress, at the absolute highest level of shareholder representation and oversight, gender diversity is incredibly robust. And when it comes to corporate integrity, honestly, this is the gold standard. Nordic reports absolutely zero confirmed incidents of corruption over the last 4 years. None. They regularly revise their anti-corruption policies, and they maintain strict third-party whistleblower channels. For a company that's managing a really complex global supply chain where reputational risk is super high, having this flawless track record is a critical piece of their risk mitigation strategy. Finally, Section 5. Looking ahead to 2026, exploring the strategic roadmap. Management has outlined a very clear strategic roadmap to generate this long-term profitable growth we've been talking about. First, they plan to fiercely capitalize on their distinctive advantage, which is ultra-low power and high-performance hardware, right at the right price point. Second, they aren't just out there selling chips. They are differentiating through ease of use and incredibly strong technical support to really excite developers. And third, they are laser-focused on proving this whole model is scalable across completely different technologies and broad markets. So the absolutely crucial point is this specific metric right here. Every single thing we've discussed today, the 75% R&D workforce, the massive equity buffer, the supply chain investments, it is all pushing toward this ultimate financial North Star, a target operating model of a 25% EBITDA margin. That is the definitive finish line management has drawn for defining true profitability. And the great news is, we don't have to wait very long to see the next chapter of this story unfold. Go ahead and mark your calendars for April 28th, 2026. CEO Vegard Wolin and CFO Paul Elstad will be hosting a live webcast to present their first quarter results. This is going to be the first major milestone of 2026 to see if they are actually tracking toward those super aggressive growth projections we looked at earlier. Which leaves us with this final pivotal question to think about. Armed with nearly $700 million in equity and a seriously rock-solid balance sheet, will Nordic successfully scale its ultra-low power technology to actually hit that aggressive 25% margin target? The foundational pieces are clearly all in place, but execution in 2026 is going to be everything. Thank you so much for joining me to unpack all this data, and I highly encourage you to keep a close eye on Nordic's journey this year. Keep learning, and I'll catch you on the next explainer.